Good morning, everyone. Welcome to Investment Talk. I'm Bruce, and today I'd like to share my investment story with you. When I was in grade 6, I read about a book written by a German author, and it had an English name, Money. According to the author, if a mutual fund can achieve a 12% increment annually, then it will be doubled in 6 years' time. I was amazed by this idea, and as a result, as soon as I finished this book, I went to the bank and opened a bank account for myself. And later, after doing researches for half a year, I started to trade mutual funds online. This is where my investment started. Throughout my 2 years investment experience, I've invested in overall 6 mutual funds, including 3 equity funds, 2 index funds, and 1 QD2 fund, which means Qualified Domestic Institutional Investors Fund. And today, I'd like to focus on 2 of them, the CSI 300 Index Fund, which is my biggest failure, and the Selective Securities Mix Fund, which is an equity fund and is supposed to gain the most for me. The first story is about the index fund. I traded this index fund for a couple of times this year, and I consider the decision in May as my biggest failure. In 2015, the A-share market in China has an irrational boom. Investors went wild, they mortgaged their house in order to get more money for stock investment. And in the meanwhile, they leveraged their capital from the banks. I went insane as well. As you can see, I traded for bought in for approximately 5,000 shares for this index fund. However, I should have noticed that the market has been overheated by comparing the circulation market value and our country's GNP. You can see, as soon as I bought in this fund, the market started to fall, and the unit price followed. Eventually, I sold out all my shares in July. Now, when I look back, I always regret how irrational I used to be. And what Warren Buffett has said always bumped into my mind. The time to be greedy is when others are afraid, and the time to be afraid is when others are greedy. That's the end of the first story. The second story is about my equity fund, which is supposed to be a successful one. As you can see, I bought in this fund just 2 days after I sold out my index fund. Why? Let's take a look at what happened in 2015. A-share market reached its peak on June the 10th, and later, in 1 month's time, it slumped for over 25% and has caused the lack of liquidity in the market. And as a result, over 1,000 stocks trading was suspended, and the IPO was suspended as well. Again, panic spread like wildfire. On July the 10th, the government announced that 20 million RMB was planned to be poured to rescue the market. This announcement made me believe that it should be the end of the crisis and the revival of the market, and what's more, the right chance to buy in. After buying in July, I kept buying in for 3 times in August. However, this time, I didn't base my decision on the government or on Warren Buffett's words, but on my own analysis. Though the government has interfered in the market in July, A-share market still kept falling in August, and the P/E ratio of the A-share market reached 13. What does 13 mean to the A-share market? Take a look at the graph below. The 5-year average of the A-share market was approximately 13.5, and the average P/E ratio for the world index was about 15. This indicates that the A-share market is having a discount. And what's more, we can see that now we're in the green area. This means that investors can get safety margin for their investments. My analysis made me believe that it should be the right time to buy in. Later, it was proved to be correct. My equity fund is supposed to gain the most for me. That's the end of the second story, and now I'd like to go to the final reflection part. I always wonder, what is the essence of investment? Is it about economy or fiscal policy? From my perspective, These are two of the most important factors of investment in the market. However, they're not the essence. Why? As you can see, in 2015, China's economy has maintained its growth. However, the market still experienced an irrational crash in June and July because it has been overheated. And what's more, after the crash took place, the government has tried hard to interfere in the market, but they failed. As you can see, neither of them are the essence of the market. Instead, it should be the value. That's why I like to use P ratio to evaluate the market, since P ratio stands for the market's condition, such as whether it's over-evaluated or it's underestimated. No matter how prosperous a country's economy is, if the market is overheated, it will eventually cool down and bring those irrational investors a great loss. That's the end of today's investment talk.